coming up, so that's why
Yeah. Is
get to
it
join time with the family again.
is Christmas like a stressful time for you, or is it like a happy, relaxed time? Because some people are stressing out, some people are like, gifts and
It
family.
depends. There's a lot of work to be done, obviously, because people, especially when it comes to my job, when it comes to finances, people want to get stuff done before the end of the year because they want to get to start into the year right. And so that's why there's a lot of people that come and say at the end of the year, oh yeah, can I have an appointment? Oh yeah, can I have an appointment? So obviously a lot of work, but I'm happy to do it. And yeah, it's been good. It's stressful, but it's definitely something that I enjoy.
That's true, right? For maybe gyms and then the financial sector and things like that, people always gonna wanna
Yeah,
start new, and then new chapter, new
exactly.
year, new me.
Yeah,
Um,
definitely.
yeah. So do you want to start with a quick intro about you? Because then we
Yeah,
can just get
sure,
right into it. Who are you?
sure.
Where are you? What do you do? Kind of thing.
Sure. So I'm Dante Sidore. I'm originally from the US, as some of you might hear. Yeah, I've been here in Germany for 14 years now at this point. So I came over here when I was 10. I'm 24 years old now. And yeah, I've been living in Bonn and Berlin here in Germany. So I moved to Berlin originally with my parents, went to a German American school there for a little bit. And then 2016, I moved here to the Bonn NRW area, finished high school here, started studying, and have been working with expats for about 4 years now.
So, what caused the move? Is your family originally German, and then
No,
no, you
not at
are
all.
your roots, everything is American.
A pure American, yes.
Okay, so what caused the move to Germany in the first place?
Yeah, so my dad originally studied German or German literature at university
Okay.
at Middlebury in Vermont. So he studied German there. We were only supposed to come over for a year originally, but yeah, turned out to be a little bit longer. My parents liked it here. Business was running well, and so that's why we said, okay, let's. Or my parents said, okay, let's stay here in Berlin, and so that was our coming.
Do you remember first coming to Germany and how that was for you?
Yeah, definitely. Yeah, so it was definitely a switch. I mean, the cultures are very, very different, especially when it comes to, for example, city living versus country living. So we were from a little bit of outside a big city. We were outside of Boston, but not directly in the big city itself. And then moving to Berlin, obviously the biggest city in Germany,
Hmm.
was definitely somewhat of a switch. The culture is obviously a little bit different, but the nice thing is that I actually went to a pure German American school. So it's actually a school for kids who come over from the States, often military or diplomat, or people like in my case here, me, where we came over, but we were still American raised, American born, obviously. And so the nice thing is there that you're sort of, you get the culture of both, countries. And yeah, you get to, from there on, sort of get integrated, if you will, and learn the ways of the German and American systems.
And how would you say it's different? Because I've never, obviously, most of the media and the pop culture and everything kind of bleeds in from the US. The US dominates that part of culture, but I just wonder how is it actually different for you growing up here as opposed to when you were in the US?
Yeah. So, I mean, some of the major differences are just the people, the culture is different. It's hard to describe because obviously they're both Western countries. So, obviously, Western influence. If we're talking about Germany, if we're talking about England or the US, obviously there are some cultural differences. I mean, especially the patriotism is a big thing, of course. I don't want to get too much into that, as politics are obviously somewhat of a sensitive topic at times. But obviously, yeah, that's one of the major things. Just there's American flags everywhere outside. People are somewhat more proud of their country. I don't want to say they're not proud here in Germany, but it's obviously due to history and everything. A little bit of a different setback. Other than that, car culture is very, very, very big there. So everybody has a car. You get to start driving at 16. And there's not as good public transportation, especially outside of the big cities. So obviously New York, LA have relatively good tram and bus systems. But other than that, other than the major cities, there's not really the same infrastructure that there is here in Germany when it comes to that. So everybody travels by car. Yeah, other than that, I don't remember that much. Like I said, I was 10 back then. So that's why obviously some of the major things that come with teenage years and whatnot, I did experience here in Germany. But I would say those are some of the major differences.
And you still go back to the US?
Yeah.
Okay, just a yearly thing or
Yeah, one to two times a
you
year.
just
So it obviously depends. All of our family is there. So our family
right.
is somewhat spread out across the US, but for the most part, all in the East Coast. So around Boston, Pennsylvania, New York, stuff like that. And so that's why we try going back once or twice a year to visit all the family, because obviously it's easier for us to go visit everyone over there than what all of them solo coming to visit here, Germany, of course. So that's why, yeah, we try going once or twice a year.
And so how did you sort of get into the whole financial sector of things? Did it have to do with did your father work in the sector, or did you
No,
have any
actually,
exposure to it?
my parents are both in creative jobs,
Okay,
but my uncle was originally in the insurance and finance sector as well in the US,
right.
working for a major corporation. And I always thought it was somewhat of an interesting topic. I started listening to podcasts and stuff like that about stocks relatively early. So, like 15, 16, I really started saying, okay, this is interesting. I have some family who is somewhat in the business at least, and this might be somewhere where I want to go in the future. I've always been a relatively motivated person. Yeah, I've always been interested in money as well, not obviously just making it, but how money works, what is the economy as a whole, and how can I use it to my, and then in this case, my customer's advantage at this point. And so that's what sort of got me into it. And then after my graduation from high school, I decided to do a duales studium. So that means that you study and work at the same time. So you get a bachelor and an Ausbildung at the same time.
Mm-hmm.
In that sense, so you work 2 times a day, 2 times a week or 3 times a week, and then go to the school the other 2 days.
Mm-hmm.
So it's a split up week system. And that's how I got started. I found it a very interesting thing. Worked in the sector for about 3 months in the beginning to see if it was something that I was interested in. And yeah, I fell in love with the job, and then obviously got to know expats, which was a niche that I'm going to get into later as well, that I started working in. So I started with normal German customers originally.
Mm-hmm.
And yeah, at some point I decided or got to know the right people and said, hey, expat consultation is something for me. Obviously, me being half an expat myself and my parents obviously being expats, it's something that I know I can relate to, and decided, okay, it's a perfect match.
And I'm just curious as to when you were growing up, what was
Mm-hmm.
the sort of atmosphere around money in your household? Did you come from like a middle class family, a well off family, or was
Yeah, a
money
middle
like
class
a
family. So
okay?
came from a middle class family. My mom works in the wine branch, so she's
Mm-hmm.
a sommelier and wine journalist,
Mm-hmm.
and works all around wine. So that's why, yeah, we come from a middle class family. Nothing super fancy. We lived in Berlin. It was a public school, so it wasn't a private school. It's just the German American thing that you have to get into. So you have to be either a citizen or something similar to that. Um, yeah, middle class family. Nothing too special. All of our
And
money was spent on
and
traveling,
why do you
especially for.
think money fascinated you at the time? Was it about, did you want to have a lot of money, or was it more about
No, it actually wasn't. It wasn't necessarily just the earning money. I mean, of course, everybody wants to be rich at some point, or a
right?
lot of people do at least. It's obviously something that motivates, especially because I like traveling and whatnot. And for that, you do need money in the
Mm-hmm.
end to be able to get around the world.
Mm-hmm.
But more, it was just how money works, how the economy works, because everything runs through money in the end. There's very few things in the world that don't at least need some sort of a monetary value, other than time, of course. That's the only other thing that doesn't really go hand in hand, but even that does. And so I said, okay, I'm very, very interested in how money works and how I can use it to my advantage, which is obviously the stock market, being that major corporation or that major bonus, if you will, towards getting there. And yeah, so it always interested in me. And I said, okay, I want to do something where I can use that interest, use that passion, because that's also, to my mind, at least how you can become successful is use that passion, use your interests in a job that you like. Because if you don't like your job, you're not going to spend as much time, as much effort on it. And then it's just a 9 to 5. But I said, okay, if you want to actually do something, if you want to become successful, then 9 to 5s often aren't necessarily, or a normal 9 to 5 isn't necessarily the job that you want to go towards. So working a little more when you're young and then being able to reap those benefits later is definitely something that always motivated me.
And but I think, I don't know if you realize, but in your opinion, what percentage of people do you think really understand how that works? Because for me, it came, I don't know, some might say early, but I think pretty late, because I had no idea. I just thought money was this thing that you needed. You need to accumulate as much of it as possible. You work till you have the highest number possible in your account, and then that means you're good to go. But then I realized, to some extent, I still don't quite totally fathom it, because it's so complicated how everything is, and it gets more and more complicated with the more things that you add on to it in the economy. But that's not enough. That's not the game that you're supposed to play. And
That's true.
so, do you think this is a thing that people, at least you growing up, do you think the people around you understood that like you did, or do you think you were early in the?
I think I was relatively early
Mm-hmm.
to it. I mean, I think 15, 16 is when people sort of start following their interests, when you can start comprehending a little bit more complex themes. Obviously, as a 12, 13-year-old, you don't know how the stock market works. You don't know what real estates are, bonds are, any of that stuff.
Mm-hmm.
But at 15, 16, especially when you have your first economics classes in school, so at like, I think ninth or 10th grade, we had our first economics classes, which we got taught. And so that's where you started learning, okay, what is the economy? How does the world work? How does money work in that sense? and what are the different branches that you can go into in order to use that. And so that means if that's real estate, if that's finance, like where I am in right now, if that's crypto, for example, there's all sorts of different things that you can utilize and try and understand how money works, if you will.
Okay. And did you think your school did a good job to give you like an introduction to that kind of stuff? Because for me, I had economy in school as well, but we did not cover any of that because we covered like the economy of countries and GDP and that kind of stuff that isn't really relevant to the individual in the economy, but nothing about stocks, nothing about how money is like printed, inflation, none of that stuff, you know? So, I mean, to some extent, but not really how it was supposed to be explained or as with the individual in the center of it. So, did you do most of that research by yourself, or did your school do a
Yeah.
good job?
Yeah, I did most of that research by myself. So obviously some of the things you just mentioned, like you said, with the GDP, with inflation, that was obviously all taught. So I remember there was there was a movie about inflation and deflation that they showed us. So an animated movie back then, that's one that always sticks in my head, for example. And that was sort of the intro to it for me. Just, I noticed, okay, money isn't just something that you can use to buy stuff, because in the end, it's not worth the same amount after 10 years. So that's sort of where inflation was the thing that really got me going. And then from there on, I started listening to podcasts. I started reading a little bit. And then I sort of just got interested into the topic, obviously talked with people who were older than me at that point. So if it was my parents, my family, friends, for example, were colleagues at some point, obviously. So I just started gaining my information from all sorts of different sources and then sort of piecing it together, and then decided, okay, it's something that I can imagine doing long term, and wanted to get into that business then.
How do you think people should be looking at money?
Interesting thing, because for me at least, I don't think there's a right answer, to be honest, because I think everybody has a different goal, and in order to achieve that goal, different steps need to be taken. So for example, for me, I've always said time and travel is extremely important for me. I love traveling. I love seeing places. I love getting to know different cultures. Obviously, visiting family in the US is not a cheap expenditure. And so that's why I've always said, okay, I want to be able to earn a lot of money early so that I can then retire early and to go and travel. I mean, that's a lot of people's goals, but some people say, no, I prefer to just live a normal, relaxed life and then work until a little bit longer, but I don't have to stress myself, right? And so getting back to that stressful Christmas time, if you will, there's sort of two approaches. There's the work hard and then at some point play hard, or retire hard, if you will. Attitude, or there's the people that sort of just go through life and don't necessarily put monetary value on things. So if you're happy with the life that you have, or if you don't need that stuff to be happy or successful in your case, then go ahead. Then that's obviously up to you. But I think there is no right way to see money, because everybody has different goals. If it's real estate, if it's having kids, if it's making sure that your children at some point have a good education or have the chance to have a good education, buying them their first real estate project, whatever it is, right? Everybody has different goals. And so that's why I think there is no one right way to look at money. I think there's only determining your goals and then figuring out how money plays a role in those goals.
I think in Germany there's a very I'm very new to Germany. I just moved here last year, so but I've noticed that there's a very strong work culture in Germany, and working and the hard work and just that honest 9 to 5 day job, that kind of thing is very integrated into society. So I don't know, and you obviously get paid from that day job, and that's your income. You provide a service and you get paid for that, and then you just keep doing that till you earn your retirement, and then the government should take care of you from that point. But now it's sort of falling apart, that system, and then people are abusing it because you can get help. Even if you don't want to work, you can still get enough money to get by and have a decent life and things like that. What do you think about that? Do you think the work culture in Germany is healthy? Do you think it's the right attitude to be looking at money in that?
I think a lot of people here in Germany, at least, and it's hard to tell because I work in one branch where this obviously often isn't the case. So when you're in the entrepreneurship or when you're in the finance branch, obviously things are a little different than if you worked at a marketing firm or anywhere else at a normal day job. So I think it's hard to really put a meaning behind it. But I think people here in Germany, the work culture is oftentimes due to history. I think people sort of just want to keep it on the low, get their stuff done, come home, spend time with their family. Obviously, I mean, the hard part is that my parents both aren't German, and so I never experienced that work culture in the same way. I think so for us, obviously, or for me at least, the American dream, that classical, you work hard, you make it, and then you get to reap that success, is sort of the way that I want to go. I want to be able to work hard now, and then at some point later, have that freedom, have that financial freedom to be able to do what I want, spend time with my family at some point, and yeah, sort of go from there. And so I think the work culture, yes, it's very, very different here. I think obviously it's not as extreme in some countries. I know in some Asian countries, like Japan, for example, a 12 or 13-hour day is a completely normal thing there, and anything less is regarded as bad. And so I don't think obviously it's as extreme as in some of those places. But yeah, it's definitely somewhat different than what I also know from the US, for example.
Right. That's really interesting because I think that's very integrated into the American that spirit, right? The entrepreneurial thing, and then you make it big, that kind of thing.
Yeah,
Yeah.
definitely, definitely.
So a normal, like a person, a regular person coming into the workforce, right? You go through school, you get your degree. At least
Mhm.
from my background of what I'm used to seeing, people from the eastern part of the world probably, but you come in, you get a job, you get a good paying job, and then you work till you save up enough money for a car. Then you save up enough, you spend that money on the car. You save up enough money for a house or an apartment. Um, you take out a loan and you buy the apartment, then you spend the next 15 years paying off the loan till you own the apartment, and then you have a family, and that's sort of the trajectory of things, and then you start
Mhm.
saving up again and again. And you put, I guess in India and where I come from, it's more about putting the money in a bank so that you gain interest on it, and
Mhm.
then you think you're making more money. So
Yeah.
this is basically the ideology of everyone, well, almost 90% of the population, except for the entrepreneurial part of the population that sort of
Mhm.
understands how these things actually work and how they can profit from it. What is wrong about? I'm not saying wrong morally or something like this, but what is wrong about this functionally? And how should people see it differently?
I mean, I think the major thing is, and I think a lot of people, especially here in Germany, are starting to realize it too, is that inflation is a very real thing. For a while, it was just completely non-irrelevant, I wouldn't say, but it was always at like 1 to 2%, which means if you have 100,000, right, 2%, not that much that you're losing, right? When looking at it long term. But for example, now at 8-9%, we're 4 times above what it was. And so putting that money on the side, unless you get at least the same amount in interest, which 8 to 9% are normally not guaranteed at any bank, as far as I know, at least.
But wait, Dante, before we get into that, how would you explain inflation to someone that doesn't understand it?
Sure. All right. So real quick, inflation just means that the money that you have is not the same value anymore as was it once was.
But how
So
is
that
that
means,
possible?
so because money is being printed so much, so
What?
there's, yeah. So obviously money has to come from somewhere. It doesn't just magically appear. I wish it did. I think everybody did. But then again, inflation would be a lot higher too if that was possible. So what it just means is that the government has either debts or other things, which means they're printing more and more money. You might be getting more money in your job, but that doesn't mean that that money is worth the same amount, because the vendor, for example, has to sell his bread for more to be able to pay for the other things that he has. So that means if he sells his bread for €5, for example, those €5 can then get him 2 cartons of milk that he brings home to his family, right? But if the prices for milk go up, for example, then those €5 aren't worth the same amount anymore, because he might only be able to get a carton and a half of milk, right? And so that's why he has to then increase those prices. And then people say, we don't have enough money. So the government starts printing more money again. And then all of a sudden that money becomes less and less and less valuable.
When I put money into a bank, right? I'm not sure. In Germany, I was really surprised when I came here and I found out that you can't put money in a bank and get a bigger percentage as interest from it. You get a very, very small percentage as interest from it.
Yeah.
But in India, for example, you get like 6%, 7%, something like that. And then you actually feel like every year you're making a big chunk more than you put in, even though that's still under inflation, right? A bank cannot profit from giving you more money than inflation. It doesn't make
Of course.
sense. So that's when I was like just interested in how different it is, how the economy works in Germany, or how you're supposed to think about money in Germany as opposed to other countries. So in Germany, if you for an expat coming to Germany and you earn money, what do you do with it? As in, like, you can't put it in a bank and get 1% when the inflation is. What would you say? What is the inflation now realistically?
Realistically, I think last week it was at 6.8%, something like that. They're trying to bring it down again. It was at 8 to 9% for a while, about 2 months ago, 3 months ago. It has gone down a little bit. It's somewhere between 6 and 7%. I couldn't tell you the exact number right now.
But I mean,
But
that means if I put in 10,000 euros into a bank in a year, it's going to lose 6% value, 6-7% value,
yeah,
purchasing power.
yes.
Even if it gains 1%, 2% on interest, that's still going to be a 4 or 5%
Four,
loss.
4 or 5% loss, exactly. Yeah. So that's why, obviously, here in Germany, the problem is that in comparison to, for example, the US or even India, working with a lot of Indian clients, for example, the investment mentality is quite different. So here in Germany, you put your money on the side and then you buy real estate at some point. That's sort of or was the mentality for a long time. You bought a house and that was sort of your pension. That's how your money stayed safe, because real estate is obviously something that grows in value as well and sort of does stay, contrary to the inflation, relatively safe. And that just wasn't the way, or that isn't necessarily the way that you should be able to do it nowadays anymore, because obviously real estate is something that has become much more scarce. It's become much more expensive. Also, loans from banks, for example, have gone up drastically. And so not everybody's able to just buy real estate anymore. I mean, I believe 60% still rent here in Germany, so don't own houses, and that's a lot. So you're paying off someone else's house, theoretically. And so that's why, being able to invest in the stock market is something that you should do. And that's, I think, the biggest problem here in Germany, is that people just put their money away and inflation starts eating at it, right? If you're investing the money, then even if you get 7, 8, 9%, then you're at least staying slightly above the inflation. Your money is obviously growing, and hopefully the inflation will at some point go back down to 2 or 3%. I mean, the long-term goal is, of course, of the European Central Bank, that they don't keep that up keep it up that high for a long time, but that it will go down at some point. And then those 5, 6, 7% will really start growing your assets, growing your money into a substantial amount, which you can then use for real estate, use for a car, use for whatever you want to use it for in that case.
So when people talk about the stock market, I guess in the beginning, when I started looking into these things, when I hear the stock market, first of all, it's overwhelming. You don't really understand what it's about. Where is my money going? What am I owning? And you automatically think about individual stocks like Apple, Google, Amazon, these kind of things. And then you see the fluctuations in the charts. Amazon's big, there's a scandal, it goes down, I lose all my money. So how should people be looking into the stock market? How do you get into it? What would you advise would be a good entry into the stock market, and why is it better than another investment? So
I think when you really want to grow your money, you shouldn't do it by yourself. So I think that's when you get someone on your side, so a financial consultant of some point, or some sort, where he helps guide you with your larger substantial amounts, where the money you really want to grow. So I always tell all of my clients, for example, take 5% of what you want to invest, or 10% of what you want to invest, and go play around with it on the stock market. Put it into single stocks, see what happens, just so that you gain your own experience as well, right? And then the larger amounts that you want to invest, so the money that you actually want to grow for your children, for your family, for whatever you want to use it for, your pension in that case, shouldn't be invested into single stocks. So as you said this yourself, the single stock fluctuation is extremely high, right? So an Apple course can go this. And so that's where you don't necessarily want to have a lot of your money in, and that's where funds come into play. So what a fund is if you want me to give an explanation real quick, a fund is a collection of single stocks, which is put into one pot, if you will, and each of those companies has a small amount of equity in the stock. So for example, if you take the S&P 500, that means that's the 500 biggest companies in the US in terms of monetary value. So Amazon, Apple, Tesla, all of the major companies, oil companies, banks, etc., all of those 500 companies are in there, and each has a different percent in that fund. So for example, Apple might have 3%, then Amazon might have 2%, and it goes all the way down to 0.3, 0.4% of that company. So that means if you invest 100 euros, for example, into that fund, into the S&P 500, those 100 euros are then in that fund split up into 6 euros into Apple if it's 6%, right? 3 euros into et cetera, et cetera, et cetera, et cetera. Which means kind of like if you have a horse track and you're racing horses, right? You don't put all of your money on one horse, because if that one horse breaks down, has a problem, or doesn't win, then all of your money is gone. If you, for example, only have 6 euros in Apple of those 100 euros that you invested, yes, if Apple takes a hit, you might lose 6 euros, but that's obviously not the end of the world. That is how the stock market works. It's a lot better than losing those full 100 euros in that case. So that's what a fund is. I think that's long-term, in terms of long-term investments, where you should go, because you're taking all of the profits, or all of the different ROIs that you could collect from the different companies or from different companies in a specific branch, in a specific group, and adding those together, combining those, which means lowering the risk, obviously somewhat lowering the ROI, so the possible interest that you can receive. But overall, I think it's a good mix of the two.
And when you talk about funds, so are you talking about ETFs? Because
I was talking about both in this case. So I was talking,
as opposed
ETF is a form of a fund, of course. So an ETF is an exchange trade fund. That's what it stands for. So it is a fund as well. We classify those into two different ones: an actively managed fund and an ETF. Yeah.
So because the first thing people think about is individual stocks, and they go a little bit more deeper into it, and they're like, okay, it's ETFs are safer. Then they go into ETFs, but then you hear about actively managed funds. Why do you think actively managed funds is a better option as opposed to ETFs, if that is in fact your opinion?
I don't think that's the case. Okay. I think it's a mix. So for me, so all of my clients, when I set up a portfolio for them, when they say we want to invest X amount of money and we want to spread it out across these and these and these fields, for example, right? I always take a mix. So if we have, for example, someone that wants to invest in 4 different funds or ETFs, I normally take 2 actively managed funds and 2 ETFs. Because to my mind, I think a good mix of the two is always a healthy option. The difference, if you want me to explain that as well real quick, is an ETF is based purely off an index. So taking the S&P 500, for example, again, it's based purely off what the 500 strongest companies in the world, or in the US in that case, are. So that means if Apple's number 1, then Apple will have the number 1 spot. That won't change. Those
the allocation is based on how dominant they are in the sector.
It's based purely off an index. It's an algorithm.
Right.
And so that algorithm, that index doesn't change.
Okay.
Yeah. But even if Apple is number 1 and their stock starts crashing, you're still investing the same amount into Apple because it's an index, right? It's an algorithm. It doesn't change by itself, at least not right now. At some point, I think through AI, that will definitely become more of a thing. But where we are right now, at least, there's an index which it forces. So the NASDAQ 100, being the 100 biggest tech firms in the US, is the same thing. Number 1 is number 1, number 2 is number 2, even if the stocks aren't performing well by themselves. And that's where an actively managed fund comes into play. An actively managed fund isn't based off an index, but it's actually based off a person's brain in this case. So there's a hedge fund manager or a fund manager who actively manages that fund. And so that's why it's an actively managed fund. And so that means if he sees Apple is going down, he's going to say, okay, put less into Apple and more into Microsoft. Because oftentimes when Apple goes down, Microsoft might go up because they're competitors, obviously. And so that's the difference. But the major con, or not major con of it all, is that a fund manager obviously needs to get paid as well, which means actively managed funds often have a 2% or 1.5% cost structure versus an ETF, which has 0.25, because obviously an ETF needs no fund management or very little fund management, because there's nobody sitting there actively managing it the way that a fund manager does. His salary obviously needs to be paid too. And so that's why that cost structure comes into play, and that's why I always think it's good to have a mix of both. Sometimes you want to buy a little bit more expensive because the performance is better, but there are some ETFs which perform extremely well too, and then it's never a bad thing to say, let's go with the ETF, where you have a very low cost structure, it still performs very well, and then you have the best of both worlds, if you will.
When you get into this world, you hear a lot of these phrases and things that get repeated all the time when it comes to trading, buy low, sell high, buy the, what do you call it? Sell the news, buy the rumor, that kind of stuff. There's things that you hear about it when you get into it. One of the things that you hear is also the saying that, I don't know, 80% of actively managed or hedge funds underperform the S&P 500. If you just put your money blindly in a passively run index, you're going to, in the long term, do better than 80% of hedge funds and traders and things like that. Is that at all true, or is that a fallacy? What?
To my mind, no. I think, and that's why I think it depends purely on the field. So I think when it comes to fields, for example, the pharma field, the medicine field, this is where we're getting into your professional field as well. In that case, I think it's important to have an active or a fund manager there, because I think those people know a lot more about that stuff than
inside information, that kind of.
Exactly. And so I think on when it comes to the 500 biggest companies in the world, sure, that's relatively stable. And that's, I mean, Amazon is not going to have a ton of fluctuation, right? Tesla isn't going to have, okay, Tesla's a bad example in this case, but all of the major players in the S&P 500 aren't going to have that much fluctuation. And yes, it does perform extremely well. But when you want to take a niche, for example, if you want to go into, there's a fund by BlackRock, for example, called the Automation and Robotics. It's a very, very interesting fund, which is based purely on future technology. It's also in AI, but like the name says, it's also in stuff like autonomous driving, stuff like that. And so that invests in a very specific field. And there's, I think, 100, 150 different companies in that fund. And I think that's something where I wouldn't trust an index, because those companies are often very, very small, right? Which means that they can oftentimes crash relatively quickly. If it's an index and that number one company all of a sudden has some sort of a failure, has some sort of a scandal or something, that company might completely crash down, and then you're not necessarily put in a good place anymore. So I think having a fund manager there, especially when it comes to more specific topics, more specific branches, is a good thing. But for example, the S&P 500 or the NASDAQ 100 have oftentimes outperformed ETFs, which invest in similar companies, actively managed funds. Sorry, my bad. Which invest in similar companies.
Right. Do you think the whole the stock market and the funds, the structure and everything will change very drastically because of AI now? Because I feel like it's going to blur the lines between indexes and actively managing funds, right?
I think so, but I think that again, it won't really, because an AI also costs money to develop.
Right.
And so I think instead of a fund manager being there, there will be a virtual fund manager there at some point. So some sort of an AI, some sort of a brain, or technical brain in this case, controlling what a fund manager used to do. And he's the one programming the new stuff, or the company will have people programming that AI to do what a fund manager would do. So I've seen projects, or I've seen headlines, read an article about it as well, where they pretty much had a fund manager who was telling the AI commands. So he said, so the way you have to teach an AI, obviously, you have to be able to give it commands, and then it learns from that. And so there's actually a fund manager teaching an AI how to think like a fund manager, because obviously it can calculate a lot more than he can. It can take risks into consideration that the human brain just can't, the same way that the chess computer also can calculate out millions of moves ahead of time before a human can even think about it. And so it's the same thing there in that case, but I think the understanding still has to be taught to the technological programs, to the AIs, before they can just go ahead and go on the market. But there have been tests where they have put like the top Wall Street brokers against AI brains or against AI programs, and the AI did outperform the fund managers in some cases. So I think it's definitely up and coming, but I think the cost structure won't change that much, at least for right now, in the next 20, 25 years. Because they still have to teach them, they still have to program these things. And those engineers obviously need money as well.
I came into this and I wanted to sort of get into you and your interests and that kind of stuff as well. But the second I start talking about finance and these kind of things, I just get driven into this whirlpool of because I'm so interested in the topic, and it's so people don't understand it to such a large extent. So and I think it's really important to have people of expertise in different aspects of your life. If you have a medical issue, you don't Google it yourself. You don't. I mean, you can, but you don't. There's a reason why there's professionals for it, because people dedicate their lives to study a certain aspect of life, and then you get a certain level of expertise in it. So I think it's very important to sort of submit to that knowledge and sort of be open to that. So it's very interesting to hear your understanding of things and why you think the way that you do in these topics. So coming into the artificial intelligence part of things, because as much as I'm trying to understand conventional finance and stock markets and all this stuff, my entry into this whole thing was like a typical degenerate with cryptocurrency during my university days, and I was. So because this was during the bull market of the last bull market, right? When everything was going up in Bitcoin, and it was the biggest.
I believe that's when we first met too. Was that first?
Probably, I think it was on the way down at that point, or it was.
That may be,
past the, and so I'm just wondering, what is your take on this whole thing? Do you think it's hype? Do you think decentralized finance? What do you understand from this?
I think crypto. I mean, I understand the basics of it. I would never call myself a crypto
Right.
bro or
Yeah.
anything like that. I don't understand. I haven't dove that deep into it because I think, to my mind, I did enough research to figure out that it's the same thing with playing around with single stocks.
Right.
So I think I tell my clients, or I tell people that say, hey, Dante, I'm interested in crypto. Do you have any tips? There's two options that I give. One is that we actually have funds that there are funds which invest into crypto. So it's not just one coin, but it's, for example, 80 coins that you have, which means, again, the same thing as with single stocks. You don't have the risk of one coin completely crashing. But I think it's something that you can play around with. I also have a little bit of money invested into it, but just to see how it goes, just to collect a little bit of experience. And in the unlikely case that it might completely shoot up the way Bitcoin did in the beginning, or Ethereum, or one of those coins, cool, then it'll work. But I don't have a lot of money, no substantial amounts whatsoever in there, because I think because it's decentralized, because there is no controlling it in that sense, right? I think it's not where you should have your long-term savings in. So I think putting your college education money, or for your children's college education money you want to put towards a house, into crypto is one of the worst ideas. And I think the past year has shown it definitely, what happened to a lot of those coins. Yeah, I mean, 60,000 to 20,000 is where 30,000, wherever Bitcoin is right now, for example, right? People lost 100% or 50% of their money in that case. So I think it's a good thing to play around with. I think that in the future, when it does become more monitored, when there are people with legal ramifications who have the experience, if it's important bankers, politicians, whoever, who start, or if this field is able to be regulated at some point, I think it's definitely an interesting thing, the same way as the stock market is. I mean, it is the stock market in that sense, just with decentralized currency, right? And so that's why I think for the future, it can be a very, very interesting thing. Play around with it a little bit. That's what I do too, but I don't think it's something that you should put any of your long-term savings in.
Where I struggle to understand it is because in the beginning, because of the hype and the all the media influence behind it, you kind of get so sold on it. But then when you go through a cycle, when you understand the other side of it, you sort of get it's not as all golden magical as it sounds to be. There's money doesn't just pop up out of nowhere and you just doubling your money is not something that's easy to do. In crypto, doubling your money is almost seen as not even interesting. You need to triple, quadruple, 10x,
Exactly.
20x.
1,000%, yeah.
And but the thing is, for a stock, so when you think about investing into a stock, even if it's an individual stock, you're owning a part of the company in a sense.
Yeah.
So if the company's making profits, they have margins, they have different things. It's a function. It's providing a service, gaining.
Exactly. So if you buy an Apple stock, for example, you own a very, very, very minute part, of course, of Apple, but you do own a small amount of Apple. If you buy enough shares, then you're at some point invited to the board meetings or to the ownership things. Obviously, you'd have to invest millions and millions and millions to be able to get to that point at some point, because there's so many shares of Apple, of course. But you do own a small, minute part of Apple, which means every time an iPhone is sold, theoretically, you're making 0.0000000 cents or whatever it is on that iPhone, right? And then that's how you gain. So that means if the company has a great year because Apple just brought out a new iPhone and they sold, I don't know, 100 million iPhones or however much they did in that case, right? You're making a small percent off that each time, which means that stock might go from being as valuable as 100 euros to then being valued at 150 euros because Apple had such a good year, because they gained so much money and became a more valuable company through selling those products.
And with cryptocurrency, what I struggle to wrap my head around is because the company part of it is sort of missing. The stock exists. The stock is the coin. I guess you're owning a part of whatever, but it isn't an equity. It is a currency. It's a commodity that the company owns.
It's like Forex trading, if you will, right? It's the same thing. So Forex trading, for anybody who doesn't know, real quick, just means you
foreign exchange, right?
Foreign exchange, Okay. So that means that you invest in different currencies. So take the INR, the Indian rupee, for example. People who say, or you might say, oh yeah, this is going to go up drastically. They switch from euros to INR. And then within an hour or something, they switch it back because the INR went up. They sell it again at its highest value. Same thing as a stock or a Bitcoin or whatever cryptocurrency you want to use in that case, and then switch it back. So it's the same sort of thing. You're converting coins, in that case, a foreign exchange, which could be a crypto coin, back into euros, into your crypto wallet or wherever you transfer back the money to.
And I think the core of it, like these companies are trying to make use of the blockchain. So if the blockchain succeeds and it has some kind of utility in the economy, then the company will succeed, and then owning their coin will bring you profit. I mean, I mean, in terms of actual value, obviously the cycles will go up and down regardless if there's actual value or not.
I think obviously though, the more regulated, the more publicly available it becomes, the more knowledge becomes publicly available, the less it's going to be 10xing it, but it's going to be 0.5xing it, right? Getting 50% will then be much more of a achievement than right now it is to get 10,000% or 1,000%, however much you want to, or however much you get in that case. I mean, the first company or first countries at this point have started using cryptocurrency as some of their currencies that work. So for example, I believe Venezuela was the first country who allowed Bitcoin and Ethereum to be used as standard payment methods.
El Salvador, right?
El Salvador,
Yeah,
that's what it was.
Same
All right,
thing, same thing.
We don't want to get into
No.
that screen though. No, but yeah, El Salvador. Sorry, my bad. Were the first who actually like legally said, okay, you can pay with Bitcoin or Ethereum in any store you want. I mean, that used to be the case for some companies. So about 20 years ago, you could pay for pizza with Bitcoin theoretically, right? There were some companies who allowed, like I believe Papa John's was one of the companies who allowed you to pay with Bitcoins back then. Obviously, it was worth nothing. It was like worth €1 or €2. But yeah, I think it's definitely something that's going to be up and coming, and I think more countries will follow suit, and it will become more regulated, because as soon as it becomes one of the main currencies of a country, of course, that country has to regulate that currency. You can't just be mining for Bitcoins randomly then at some point, right? Because that would, again, be inflation at its finest.
Do you think crypto is going to be a thing in, let's say, 20 years? It's still going to be there. People are still going to be investing, losing money, making money, that kind of thing.
I mean, I think a lot of people are switching from cash to other types of currency. I mean, currently it's the credit card, it's the debit card, it's the Apple Pay, it's whatever you have as your card or online banking thing. And I think in 25 years or in 30 years, that will be outdated, and there will be some sort of new payment technologies, and it wouldn't surprise me at all if crypto is integrated into that, at least. I don't think it will be that you just pay with crypto for everything. So I wouldn't just go into the grocery store, for example, and pay with crypto in 25 years, and they wouldn't accept my debit card. But I think it will definitely be an integrated part of the future. How that will play a role, I'm not sure. I don't know. But I think that, yes, it will definitely still be there in 25 years or 20 years.
What do you think about, like you said, we're moving away from cash now. People already, I mean, in Germany, there's still quite a bit of cash payment. Right. I guess the anonymity of it, the, I don't know, physical nature of it, and the traditional way of using cash still is around. But what do you think about the whole cash versus sound money, gold, that kind of... I wanted to talk to you about gold as well. I wanted to hear what you have to think about that.
Sure.
Why does it perform so poorly when philosophically it just makes so much sense? Do you know what I mean?
Yeah, because you can't walk into a shop and pay with gold.
Right.
I mean, that's simple. You couldn't walk into Raven in this case and say, here, as a gold bar, I want to buy €800 worth of groceries, right? That's not the way that it works. There's obviously a process that has to be put behind it. So it either has to be melted or sold to a jeweler. So obviously there's transaction fees with that. There's the jeweler wants to make a little bit of money. You can't just pay with gold or with any type of metal in that case. Normally, at least, obviously, there's some countries or some portions of countries where that might be possible. I'm not sure. But overall, it's obviously not considered as a standard payment method. There's no immediate monetary value to it until it's been weighed, until it's been figured out what type of carat it is when talking about gold in this case. So I think that's the main reason why it doesn't perform as well. And obviously, it's a natural resource. So I mean, diamonds, if you take a look at the diamond stock, theoretically, if diamonds had a stock in that case, they also haven't gone up drastically because you're always able to find more. Yes, it's a scarce metal, of course. It's not everywhere. You couldn't just go and find a gold nugget anywhere, but it's not something that's, in that case, regulated the same way that the cash is, for example. So you can't just have an influx of unlimited cash, but if someone finds a gold mine and finds 100 tons of gold under the ground or whatever, that's theirs. There's nobody that can say, no, that's not yours for the taking in that case, if you legally, of course, obtained it. And so I think that's why it's a very, very safe thing. It's something that'll never go down because there's always going to be people that are in need of gold. Right. So there's always going to be jewelers who want to, or Rolex or any big watch companies, whatever, that use gold for their daily business. And so there's always going to be there's always going to be people asking for it, right? There's a demand. That's the word I was looking for. There's always going to be demand for gold. And so that's why I think it's something that won't drop drastically. If you take a look at the gold charts, if you take a look at where it's gone, it always goes up very, very slowly, or goes down a little bit and then goes back up. So it's a very, very, very stable thing. And that's why I think it's so beloved among a lot of people, is that they know they're not going to be making a lot of money on it, but at the same time, they're not losing a ton on it either. And you can keep a gold bar in your safe, in your house, in your bank, wherever, and you know nobody's going to get at it. Right? So theoretically, if a bank gets hacked and all of the money is gone, yes, there's insurance behind it and whatnot, but theoretically, all of your money could be gone. The bank can't, or the bank doesn't necessarily guarantee it, especially when it comes to third world countries, for example, where there isn't the same insurance culture. There's not the same economic culture there is in westernized countries in that case. And so I think that's why it's so beloved, right? And
would you say that gold maybe like you said, it's not really an investment to make you big money, but do you think it does enough to protect you from the loss of money from inflation?
Yes and no, because gold sort of
time frames.
Exactly. So it depends, but on average, the gold sort of moves independently from monies or from inflation's percentage, or from the percentage of the inflation. So that means that that gold, oftentimes when the inflation goes up, gold will go up with it, because somebody's paying more for a gold bar because somebody's asking more because the costs went up. So if my rent goes up and I have to ask a little bit more for my gold bar that I have, right? Somebody else will pay more because otherwise they're not going to get it.
Right.
And then so that's why gold oftentimes moves in cohesion with inflation in that sense, so that yes, in comparison to just leaving the money on the bank, it will definitely be a better investment, right? But it's not nearly as good, to my mind at least, as real estate or stock investments.
Good. Okay, so I come to probably the last thing that's on my mind about finances. Passive income. Everyone wants financial freedom, passive income. So you're working, and then apart from the money you get from your the company that you work with, you have money coming in from the side. So even if you're out of a job, even if you can't work or don't want to work, you still have enough money coming in to give you a good life. What do you think? What do you think would be, for people like working people? What is an achievable means of passive income in this economy, in Germany specifically?
I think the most attainable passive income you can gain, at least in the short term, I'm talking about 10 to 20 years, for example, is real estate. Because real estate is the most effective and the least safe way, to my mind, at least, of passive income. Because once you've paid off that house and you're collecting rent through it, so that means real estate in this case means renting out real estate. So not something that you live in yourself, but something that you rent out, right? You're collecting, for example, if you get 900 euros of rent every month from your tenant in that case, that's 900 euros of passive income that you're receiving as soon as that house is paid off, right? That means if you've paid off your house in 10 or 15 years, after those 10 or 15 years, if you're continuing to rent it out and haven't sold it yet, right, that's passive income that you can gain. And then you can buy another house from that. And then all of a sudden, at some point, it's two houses that are gaining you 1,800 euros of passive income, et cetera, et cetera, et cetera. I think that's the most attainable way for most people to go, because you can start off with very, very small flats, right? So you don't have to invest 1 million euros into real estate in order to get some decent profits off it. But it can start at, for example, 150,000 euro total apartment, which means you need 10 or 15% of that as a down payment. And I think that for a lot of people is quite attainable. Somebody that's actually interested in saving up their money, in building up passive income, is definitely possible, or definitely able to have 10 or 15,000 euros on the side, versus having 150, 200, 300,000 euros on the side, right? And so that's why I think that's the most attainable way. Another way, of course, is dividend checks at some point. So if you do invest into stocks, if you do invest into companies and funds, at some point you can let yourself collect dividend checks, right? So a company, if you have enough stocks of one company and you buy dividend stocks, right, you do collect a small amount of money back from the company every year. So if they do well, they pay out, I don't know, 100 euros, 200 euros, 300 euros if you've invested a small amount. Obviously, the larger you go, the more you can scale that. And at some point, you're collecting maybe 5,000 euros of dividend checks a year from 3 different companies. That's 15K. And then you have your passive income of 15, 20K per year, right? But then again, that requires at least a 10, 15, 20,000 euro investment. And last but not least, if you build up a normal portfolio, you can at some point have, or most investment companies, most investment houses where you are, we offer this too as well. You can, after 10 or 15 years, if you've built up enough of a ground base and you're collecting so much interest, then you can let yourself just be paid out that money at some point too. So you're collecting, once you've collected enough interest, you can let yourself, for example, be paid out just the interest that you're collecting. Your money is still in there, which means you're not actually losing money. And so that's a passive income as well.
Right. And I'm sure there's funds that accumulate dividend companies. Just it's not individual companies that you have to be risking investing into. You can probably put it into a fund, and then each company pays you a certain amount of dividends.
Exactly.
Right, based on your allocation. Good. So dividends and renting or rent money would be, and you'd say in today's economy, the rent money would be the best.
I think it's the quickest way to have a safe income. Yes, of course, at some point a tenant might leave, but real estate is always a scarce thing. There's always people looking for apartments. And so I think renting out an apartment, as long as you buy it in a smart location, as long as you take the right steps ahead of time, do your research and buy it through the correct company so that you know that it's an apartment that will be rented out quickly to, that's high on demand, right? I think that's the easiest and, to my mind, at least quickest way, because after 15 years, you can definitely have a small apartment paid off. And then that apartment is completely yours. And for the rest of your life, you can collect rent on that, right? Or until you sell it, right? And then you can also sell it for a profit as well and use that money to invest into a new real estate project, right? So there's always, it can be a continuous cycle as well.
And we talked about this, I think a year and a half ago as well, about the interest rates for the Finanzierung, the loans that you take out of the bank to get an apartment, let's say. What is it now? 3-4% more?
3-4%. Yeah. And I mean, it obviously depends on your personal situation as well. So if you're somebody who has a very good income, who has a lot of money as a down payment, so if you can offer, for example, 25% of the loan as a down payment, obviously the bank knows, okay, you're making enough money, you're responsible with money. We're going to give you a loan for maybe 2.9% then instead of 3.5% or something. So it obviously depends on your personal situation. If you have kids, if you're married, all of that stuff obviously all plays in, because it depends on how much money you have and how safe you are for the bank, because the bank is theoretically investing money in you too, right? You obviously have to pay them back. They're loaning it to you, but they're going on they're taking the risk in the first chance that they're giving you that money and you are going to have to pay it back somehow. And
is it never coming back down?
Yeah, I think it will come back down, but not in the next 5 years.
So you cut off there 5 to 10 years, did you say? Or?
Not in the next 5 years, I would guess.
In the next,
obviously,
years.
I don't know either. I'm obviously not the person who decides that as well.
Right.
But from what it looks like, they were up even higher for a little bit. They've gone down slightly. Like I said, they're like 3.5%, maybe 4%. They were at like 5 to 6% at one point for some of the stuff. And so I think it will go back down a little bit, but it'll take some time, right? So I think because the economy is working or going quite well, oftentimes it goes hand in hand. And so I think that's why, for right now at least, they will stay up for a little bit here in Germany.
And higher interest rates, lower inflation, weaker economy, is that a sort of scale that right and left?
Yes and no. Oftentimes when the economy is weaker, the banks have to be able to give higher interest rates to make money. So banks have two ways of making money, right? One is obviously the interest they collect through loans. The other one is they invest your money too. So if you give the bank 10,000 euros, they're not leaving it in their safe either. They're investing it in their own house, right? They don't have a huge safe with trillions of euros there. They obviously invest that into their own, they have their own financial consultants as well, where they invest that money. And so that's how they make money. If the economy isn't running well, the banks need to up their interest a little bit in order to still collect and still be able to finance the rest of their customers, the rest of their staff, all of that stuff.
Right. So, so that's what I mean. So a higher interest rate would be kind of suppressing the economy, or the other way around, and also
but it's not bring down inflation. The economy has been running quite well this year. If you take a look at most of the funds, they've all been performing extremely well, unless you invested in a few very bad companies. It's hard to have lost a lot of money this year at least. And so I think for right now, it's not just because the economy is going up, the prices will go down, or the interest rates will go down immediately. It will take some time, of course, but it tends to be that way, yes.
It's really interesting. Okay, you've given me a lot of your time, and I've learned a lot, as always, when I speak to you about these things.
Thanks.
But I just want to know from your side, what would you say are your personal goals in the next 5? Because this whole thing for me is interesting to see, because I sometimes I'm staggered at like how many years have gone by. and how
Hmm.
many things have changed in the last 5, 10 years. And I wish I knew what I was thinking or what I was talking about back then, or the people that were in my life, at what point they were at back then, so I can reflect on it and see, how things have changed. What do
Yeah.
you think? What do you think you'd be? What your goals would be for the next five? I'd say 10 years, maybe.
Yeah, sure. So for the next 10 years, I definitely want to, yeah, really grow or scale this whole expat thing. So I think me and the rest of the expat team, obviously I'm not alone. We have a team of, I believe now 15 consultants and or assistants at this point, back office people who make sure that we organize everything and whatnot. So we're a total of about 15 consultants plus assistants plus back office, all of those people. Pardon me. And so I think we really, or at least I really want to scale it to the point where we are the number one expat consultant company here in Germany, because I think it's so important. And I've had so many people, including you and a whole bunch of others, say, hey, Dante, we're really thankful for what you did, because when we went to the bank, they only spoke very, very broken English or none at all. Right? We didn't understand what we were doing. We didn't understand how to be able to invest money here in Germany, what the different types of insurances are we need, what are some things as expats, for example, that we should look out for versus just normal German clients. So obviously there's some major differences there. And I really want to, as an expat myself, as someone who works with expats and loves consulting in English, it's my mother tongue, obviously, as well. Yeah, I really just want to become that number one expat consultant company. I think that's the goal of all of our team members, not just me, of course. We're all working towards that. We all want to be able to, yeah, help serve as many expats as possible, be able to consult as many expats as possible, and obviously build friendships along the way there too. So I think that's one major thing, obviously, that I want to do. I also, in terms of diabetes, so for the people that don't know, I'm a type 1 diabetic. I was diagnosed 4 years ago at this point. And right around COVID originally. And in terms of that, I want to be able to make some sort of progress there too. I'm not sure where yet. So obviously I donate some money, of course, to the research, but I want to be able to, at some point, make a substantial difference in some way or another in terms of diabetic research when it comes to healing or finding ways to cure, or at least make the life of a diabetic a lot easier. So it's something that I go through every day. It's something that a lot of people, millions and millions and millions of people, have to go through. And I think or at least to my mind, it's something that I can influence, especially if the business is running well, if everything is running well. I would really want to be a part of some sort of a project there. I have a few ideas already that at some point I'd be happy to share. But it's definitely something that I want to do long term, because it affects me as well. And I want to be able to leave some sort of a mark behind, not just my company or the company that I work for, but also something personal outside of my business.
I don't know if you're comfortable talking about this, but could
Mm-hmm.
you touch on what impact that's had on your life since the diagnosis?
Sure,
Was it a
sure,
big?
not a problem. Yeah. So I mean, everything in the end, everything changed on that day or during that time, because it's a whole new way of life. You have to take things into consideration that you otherwise wouldn't. So obviously eating is the main thing, of course, but also sports, also sleeping, all of these things. The body is so unpredictable. It means you constantly have to be aware. You constantly have to be checking your phone or whatever else for your glucose levels, for all of that stuff. So I think that diagnosis changed a lot. It also made me a lot more disciplined, because it means you can't just ignore problems anymore, right? If you're going too low, if your blood sugar is too high, that's something that you can't ignore, because that will end in potentially fatal consequences. And so that's why for me, it changed a lot. It made me a lot more aware of how I eat as well, because I have to check the carbs, of course, on everything to know how much insulin I have to give myself. Um, yeah, I mean, it changed a lot, but it also gave me a lot of new insights. I met a lot of new people. I got to know my body a little bit better, just because every body reacts differently. So what the doctor, for example, what my endocrinologist tells me, how medicine, what practice, general practice might be, doesn't necessarily work on me, because every body is different. You as a doctor, I'm sure, know that as well. Everybody reacts to different things differently. So if I do sport, for example, some people go up some people's blood sugar goes up when they do sport, and some people's blood sugar goes drastically down. And so that's all things that you have to take into consideration. But I think it's something that it's there. I can't change it. And I at least want to be able to leave some sort of an impact on that long term as well.
For people that don't know, type 1 diabetes is an autoimmune disease, and then the cells that produce the hormone insulin, what you need to metabolize glucose in your body. It's without glucose you can't survive. The insulin production, the cells are destroyed, and so your body is not able to produce insulin anymore. So you have to exogenously from the outside inject the required amount of insulin after every meal, for every exertion, for everything that you need. Your body needs glucose for, and if you don't, you can go into ketoacidosis. That means your body produces energy from different sources, which creates a lot of acids in your body, and then you can essentially die from it. And
That's how it's discovered most of the time. So,
and
for
was
example,
that the first diagnosis? Did you have a severe? That's usually
yeah,
the first presentation,
yeah,
right? You have to
exactly.
go
So that was it was during COVID. It was actually came out through COVID, believe it or not. So obviously, COVID is a virus, and an autoimmune disease is caused through or can be activated
yeah.
through a virus in that case. So obviously, it's been there since birth, but it was activated through the doctors believe it was COVID. We obviously can't prove it, but at least that's the suspicion.
Yeah.
And yeah, nobody in my family had it before, so it's something that oftentimes can be hereditary. Nobody in my family had it, at least. And so yeah, I lost like 20 kilos, so I was super skinny. I was drinking, I believe, like 3 gallons of water a day, so like 8, 9, 10 liters of water per day, because it just flows directly through you when your body goes into ketoacidosis. Liquids just they aren't processed, I believe is the correct
because
or they aren't taken in, so
the
it goes right
saturation the saturation of your fluids are so concentrated that it absorbs. It can't. It's not dilute anymore. It's so
yeah, exactly.
It absorbs so much water just to get it out of your system that you just
Yeah.
all the water you're consuming just gets out of you. And
Yeah,
if you don't
so that
replenish,
was
you're just gonna.
So that was that. And then I was doing sport for a long time, especially during COVID. I was running a lot just because I wasn't able to play ice hockey, lacrosse, or all the other sports that I used to play. And so I was running a lot. And then at some point I noticed my lungs were really hurting. I thought it was that I had some sort of a lung infection or something. And I was super tired as well. So that was also one of the major things. And so at some point we said, okay, let's just go to the doctor. We didn't know the warning signs at the time. So that's something, for example, we didn't know that all of those warning signs were pointing towards type 1 diabetes, but we went to the doctor. I told her my symptoms and she started smiling and immediately knew what was up, because obviously as a doctor, those warning signs go off when you hear weight loss, a lot of water, obviously all
The age
all
and
the
all
time.
these things, yeah.
Exactly. That's all stuff that obviously rings bells for you as a medical professional in that case. So yeah, we went there and the diagnosis, blood was taken out, and they relatively quickly figured out my blood glucose was, I believe, 5 times as high as it was supposed to be. So
yeah, but I feel like you've managed to sort of did it affect your outlook on life at all? Your perspective? Did you go through a low point before you got back to a point where you can sort of handle it in a healthy way?
yeah, definitely. I mean, I think the biggest thing is that I don't have a choice. So oftentimes there's two, and this was something that I talked with my doctor a lot about, was that there's 2 types of people when they get diagnosed. One is the person who just accepts it and tries to find a way around it, tries to find the silver lining, right? And the other person tries to deny it as much as possible. This isn't real. I'm just going to ignore it. I'm not going to take care of it the way that I should. And I think luckily for me, I was that first person. I just said, okay, it's here. There's no cure for it. Complaining, ignoring it, or anything else isn't going to change it, right? It's there, and if I don't take care of it, I'm going to die long term, of course. And so for me, being an ambitious person, being someone who does want to have a lot of, or at least enjoy life as long as I can, it became relatively clear, okay, I have to change somewhat of my diet. But the good thing is type 1, you don't have to change that many things when it comes to your food, because you just have to give yourself insulin for it. It's annoying. It's a process that you have to go through, but in the end, I can still drink a soda. I can still eat an ice cream. I can still have whatever I want. You just have to give yourself the right insulin amount for it in the end. And so for me, I said, okay, it's just an extra step that I have to take. It's one more thing that I have to be aware of. Of course, when it comes to stuff like, for example, tests or meetings, sometimes all of a sudden my blood sugar goes down drastically. And then that does obviously have somewhat larger effect. So for example, during university, if it went down there during the middle of a test, I then obviously started sweating, having the symptoms of
Glycemia.
Hypoglycemia, yeah, exactly. And so that was, for example, then in that case, something that it does affect you, of course, and it's something, I believe it was, you have to take 130 more decisions a day as a diabetic than you do as a normal person. It's something like that, because every decision you have to think about, or you have to factor in at least 3 different things. One, how is it going to affect my sugar? How is it going to affect my sleep? How's it going to rate? Those are all just extra things that you have to take care of. So it means your body is constantly thinking, it's hard to oftentimes really, really calm down. I think that's the biggest impairment, if you will. Other than that, obviously the eyes are affected a little bit because nobody can manage their diabetes perfectly. I'm not perfect either when it comes to that, but I think those are the major things.
But hey, as human beings, we're very resilient, stubborn creatures,
Yeah.
and all the 130 decisions. It's a lot in the beginning, but then I feel like after a few years, it just becomes a part of who you are, and then you can, if you have the right perspective. That's why it's so interesting for me to hear about perspective from the side of people that have been through certain things that I haven't been through.
Mhm.
Because once you have perspective, you can really, really get around a lot of things
Right.
that are.
Definitely.
So yeah, that's very true. Before I let you go, I just wanted to ask the company that you're working for is expats, and then the SwissLifeSelect is something different.
Exactly. So SwissLifeSelect is a major German financial provider here in Germany, right? So we are among the top 3 biggest, I believe. And the company that's my employer, theoretically. That's the company where, if you look at my work contract, that's the company that signed there as well, all of that stuff. But we are, or at least I work for the expat division of Swiss Life, and we're called German Sherpa.
Mm-hmm.
So we decided, just because we wanted to have our own sort of branding, we work with very different people. Also, the ads targeted towards German clients, for example, might be very different than towards expats. There's oftentimes cultural differences that you might have, for example, in Muslim religion versus in Protestant or Catholic religion, of things you might be able to show, right? All of those things make a difference. So we decided to make our own expat division of Swiss Life. We still obviously work very closely with Swiss Life. We still use them as our platform, but we sort of just have our own branding, and we're the expat division of it, German Sherpa. We also have our own website, and that's mainly what I use, at least when I introduce myself and whatnot. So Swiss Life is our technical platform. They're our cooperation partner, if you will, or collaboration partner. And the company that I actually work for is German Sherpa.
Right. Thank you for taking the time. It's always fun to talk to you. I was always curious to hear some of the opinions you have on certain things and about you as well. So maybe you can send me the stuff that I can put in the video if people want to reach you. Because I always wanted to sort of share something with someone, because I know that I always wanted to do this, have some kind of financial literacy from someone that is literate themselves in that aspect of things. And a lot of people coming in, they wait so long before they get into it that it's often too late, because every year you're losing value in the money that you store in your bank as well.
Yeah, so we offer free seminars. If you guys want to go visit my website, I'm sure Gautam will put my contact details in the website in the bottom. You can visit one of our seminars, or you can contact me directly with the contact info Gautam gives you as well. So I'd be happy to consult or help anybody that has any questions. You can also reach me via Instagram if you just have a DM or a question that you want to have reached out. So I'd be happy to help you guys on any of those things.
Right. Thanks, Dante.